Hi everyone, I'm Mirela Ciobanu, lead editor with The Papers. We continue our series of articles and videos that aim to bridge the knowledge gap between traditional finance and DeFi. This year, we are going beyond the buzz to show real use cases of how digital assets are transforming the financial industry. But what exactly are these digital assets and the technological solutions and infrastructure that are making them operable? What does the tokenization of money mean for the global financial system? Today, I'm joined by book authors Michael, Selim, and Coşkun to discuss their latest book, Tokenization of Money, From Fiat Currencies to Stablecoins. We plan to explore why digital assets, tokenized deposits, and stablecoins are essential for the future of banking and finance, and what traditional bankers need to know to stay competitive in a digital economy. So grab a cup of coffee, and I hope you enjoy our conversation. Michael, Selim, Coşkun, happy to have you here.
Very good
Thank
to be
you for
with
the
you.
invitation, Mirela.
Yeah, so could you please introduce yourself and explain how you teamed up for this book? And we can start with Michael, then move to Selim, and then Coşkun.
Well, very happy to do that. My name is Michael Salmony, and contrary to my illustrious co-editors who are professors and central bankers, I'm a humble practitioner. I have just spent a lot of years working in the payment space, and especially on payment innovations. I worked for many years at Worldline, and now I advise lots of banks and regulators and fintechs and service providers, central banks around the world on new developments in payments. And I think one of the most exciting ones is this tokenization of money.
Yeah, thank you, Michael. Selim?
Hi, Mirela. Thank you again for the invitation. That was great to be with you in this episode. So, my name is Selim Yazıcı. I'm a professor at Istanbul University. I'm teaching management and strategy and also financial technologies and also insurance technologies for the last 25 years. I like technology. I like payments. I like digital banking side. So my focus is on what the digital technologies will bring to the financial industry. And with the last maybe 15 years, I've been writing some books and some articles and some research about fintech and insurtech area.
Also nice to hear from Michael from consultancy side, and you're from academic work, but it's a combination with innovation and technology.
Sure.
And I'm sure that Coşkun will top up everything. I have this feeling.
Hello, this is Coşkun Küçüközmen from Izmir University of Economics. And I've been here for nearly 16 years teaching at the Faculty of Business at the Department of International Trade and Finance. And previously, I was a central banker, and I worked for the Central Bank of the Republic of Turkey for nearly 20 years and 5 years in the Banking Regulation and Supervision Authority. And, I have gained, really good experience about, banking regulation and supervision. But, many things significantly changed within the last, say, decade, artificial intelligence and the digital assets and the financial technologies and incredible amount and, maybe the scope of the innovations in finance made everything, the rules are being rewritten, but the nature of the things are, probably the same. I'm teaching here the fintech and, I will start to teach a new course designed by myself, AI-driven decision-making in international trade and finance. And I'm very happy to be in the group of editors, Michael and Selim, really, excellent partners for, writing and editing a book. And so, and this topic is, I believe, one of the most important issues, maybe, next 5 to 10 years. So I'm looking forward very much with an excitement. Yeah.
Yeah, as I noticed, most of you have various professional backgrounds, and I think also the location where you are based is different. So now I'm curious, how did you teamed up for this book? What was the initial spark that made this book born.
So, Mirela, let me start by the short history, which will take an hour for me to give an outline. So, Michael and I know each other maybe for the last 7 years, maybe more. So we met with a friend, then started arguing about financial technologies. I visited Istanbul for a couple of times. We had some dinners, we had some coffee, and we were also talking about the financial issues, as you know, I mean, the technology side. So I thought that it was good to make something tangible with him. By that time, we met Coşkun in a conference maybe 2.5 years ago. Then we start talking the same thing. And I thought, why don't we sit at the table and think about the same issues and try to write something? That was, I think, October 2024, which was 1.5 years back. We started to talk about a book project on CBDCs by that time, which were very popular by that time again. As we started to investigate and inquire more research on the literature and industry examples, so we thought it would be more comprehensive to go beyond CBDC and create a more holistic approach. And why don't we talk about and write something about tokenization? So as we know, this concept is also so wide. We try to limit it with the tokenization of money only, and especially at the end of the day by stablecoins. So it took more than 1 year, maybe and a half, to write the book. Of course, we're not the only authors. We have some 30 more authors contributing to the books, which gives the book a flavor that you can have from all over the world, from all over the professions, and with deep knowledges. So that's why we believe that this book is going to be so strong once it was published.
Oh yeah, maybe one of you can give more details regarding this impressive number of 30 authors, more details regarding their professional background. So in a way, to create the complex feeling of the book, because I have this feeling that it's not just presenting tokenization and stablecoins, it's also taking some perspectives and so maybe something about the rest of the authors, some details.
Yes, sure. So we were trying to cover a wide range of issues, starting from technology, from user experience, I mean the sociology side, the economy, and also regulation, plus the strategy. I mean, if you combine those four, you can end up with the strategy. We knew that just three of us are not enough, so we need some leading voices from all over the world, from the industry and also from the academia. That's why at the end of the day, we ended up with 33 contributors, including us, which represents a broad spectrum of co-authors, I mean the contributors. Some of them are from global financial institutions and banks. Some of them from central banks and supranational institutions. Some of them are from international consultants, independent experts. Some of them are, of course, from academia. And some of them are from the legal side, I mean, legal and regulatory experts. If you combine them, we have 33, which means that we have 3 football teams in this book.
Yeah. And now I was about to make a joke, but I'll leave it for when we end this part of our interview. What makes it different, this book on digital assets, from what we already have on digital assets? Why should readers, buy and open and read your book? What do you think are their strengths?
The strengths for me, I'm sure the other my editors are going to say maybe more different things, but for me, the key differences in this book are the book is fact-based. We don't have just the hype or the other things. We take hype versus reality, and we try to create a guidance. The second one, we have a multidisciplinary depth. As I said before, we have 4 dimensions. I mean, technology, sociology, economy, and the regulation. We have a global diverse authority from all over the world, not from the European side, not from Turkey. We have someone from the US, mostly from Europe, Middle East, also Eastern Asia, and also from Japan. So we cover the 24 hours zone in the world, which gives us a great authority. And we also have historical and geopolitical context in the book. But for me, the best part is the last. We have a forward-looking scenario at the end of the book, which we didn't call it as a conclusion, but is another history is going to be written after this book, maybe.
Yeah. So this is how you end up while drinking Turkish coffee and having dinner in Istanbul, Michael, right? Writing a book that is so complex and covers the whole world. But we need to narrow the discussion and now return to Coşkun and to see the terminology that we are playing with within the book. So we talk about stablecoins, tokenized deposits, CBDCs. Maybe for readers that are less familiar with this space, how would you clearly differentiate this in terms of purpose and value? And yeah, since we talk about value, what value do this bring to end users and financial institutions?
To be honest, it's not very easy in the first instance to make a differentiation about the CBDCs and tokenized money and cryptocurrencies, but there should be a definition that covers, the real meaning behind this new concepts. So, we use country examples. For example, China has been the first country to use, e-Chinese yuan or e-renminbi, and so tested it with tens of millions of people. The amount of settled assets in the tokenized money, hit trillions of dollars. So there's definitely be a common ground to make everything understandable, in terms of terminology and other things. So, we decided to use money as a proxy. And, how does money evolve? Actually, the nature of money doesn't change, but the way that we use that, the people use it, significantly changes because, originally and inherently, the money is issued by central banks. But today, money is issued by, the different sources. And, and the banks are really the leading institutions that are running, engineered financial products, including money in a token form and the stable coins issued by banks and instruments. There are lots of instruments pegged to fiat currencies. So the distinction lies not only the issuer of the bank, but also their role in the within the monetary hierarchy and the financial intermediation structure. So the forms of money introduce real-time settlement, programmability, and the efficiencies in the wholesale and retail payments, and for liquidity purpose. So it's a little bit complicated, but the main point is that we now have some certain definitions with the help of the BIS, because they are the leading regulator and supervisor on a voluntary basis, not, imposing rules and regulations. But, the Federal Reserve, the Clarity Act, and the Genius Act, and, individual countries' efforts make a non-uniform global landscape rather than a dominant model. They have their own definitions, but, people started to understand each other now. By people, I mean the regulatory authorities now, started to talk the same language. And within the last couple of years, this really has been gained importance. So the definitions will appear, elsewhere. And so the regulation is the key for a, smooth running of the system.
Yeah, I love this fact that usually they are saying about central bankers that are more, let's say, traditionalist in approaches when it comes to innovation. But from what you are presenting, I all the time hear this idea of talk, of communicating, of not depending on one single way of doing things or one single method of moving money, So I have this feeling that, yeah, we have some prejudice regarding how we see people in this industry. But returning to this idea that this new form of money introduced real-time settlement programmability, so everything is about infrastructure. What are the most significant implications of tokenized money for banks, monetary stability, and financial ecosystem? So what are the implications at a deeper level in financial system of all these new systems?
Yeah, the first thing is that banks should really understand what they are doing. If they don't understand what they are doing, it's the biggest risk. So the main point here is that, to introduce a new instrument that will make things a little bit easier, but it's a little bit, handle with care issue, And so, I will stress again, having a, as a person having a, regulatory and supervisory background, that supervision is the key. I mean, there are always risks. For example, even in the, fiat money used by the, countries have a risk of inflation if you cannot, properly adjust, the monetary policy and the economic policy together. And we can talk, the same thing about tokenized money if you really don't understand the technical issues and the programmability and the real-time settlement and, new efficiencies in the wholesale and retail payments, for example, liquidity management and reducing reliance on legacy correspondent banking systems. But for the end users, particularly in emerging markets, we can improve access, reduce friction, and enhance resilience in payments. So it will be working as a catalyst, I believe.
Yeah. And now turning also to the new business models and infrastructure around payments, compliance, and interoperability that are going to emerge. What business models, what things do you see emerging here? I don't know, maybe something like stablecoin clearing systems, or what other things can appear here? I don't know, maybe Michael can complement or.
Yeah, if you like, I can jump in on this. Yeah, I mean, this is quite a departure from what we've had for the last decades, right? If you remember, the money is moved now using ACHs and RTGSs and sending the money as one message and sending the settlement as another message, and it goes through correspondent banking, hops across different banks before it gets from one country to another. This is all going to change with things like stablecoins and deposit tokens and everything. It's basically wrapping the money into a cryptogram and sending it directly to your counterparty. So it goes straight over, and that should worry people like SWIFT or people who are in correspondent banking or who operate the traditional rails. So we're going to get a new infrastructure, that's for sure. And the problem at the moment is that so many people are now piling into this tokenized money that we're getting many new infrastructures, and that, of course, needs to be harmonized. But there are people working on that. But this is clearly such a powerful paradigm that we're entering in now, that we can send this tokenized money directly around the world instantly, 24/7, and not just in a local geography. That this is going to happen, and it's just a question of everybody figuring out, first of all, the terminology, as Coşkun said, because we don't even agree on on some of the really basic terms, and then agreeing on the business models and agreeing on the infrastructure, and that's what's happening now, and that is indeed what we cover to some extent, to quite some extent in the book.
Yeah. Every time throughout the interview, everyone that wants to comment on the other one's answer is welcome to do so. So, Selim, if you want to add something to the infrastructure layer, feel free to.
Maybe I can jump in something with the payments, because payments, as you know, is the biggest area in the financial system right now. It is the most fascinating area for me. Maybe we can add to Michael's statements that payments, we're going to see some atomic settlements, maybe with this stablecoin issue, maybe some embedded programmability with the help of smart contracts. Maybe we're going to see some smart POS terminals that manage multiple tokenized rails through a unified interface. In the book, we have some examples about the QR codes system. Maybe you can read it. On the compliance side, maybe this is one of the key areas of this system. Maybe we can have some compliance by design issue that we can embed into this system. And also, Michael mentioned a technical challenge that everyone should really understand is the interoperability. Once you are going to send the money from your country to any country in the world, which is an end-to-end settlement. So interoperability is going to be the key, because every other technical perspective or underground is going to talk its own language, technical language. So the main question is how are you going to harmonize them? So maybe this is going to be a new challenge for the industry.
Yeah, especially now with all these blockchains and all these initiatives in infrastructure, in stablecoins infrastructure appearing now. I have this feeling that everyone wants to solve the interoperability and fragmentation issues. And on the other hand, everyone now is building their own infrastructure. So we are burning a candle at both ends.
That's capitalism for you, right? Competition is good, right? Let a lot of flowers bloom and see which one wins, right? And it could be stable coins, it could be CBMTs. That's something the German banks are dreaming of. It could be tokenized deposits. It could be CBDCs, and maybe fiat will still play a big role. I certainly believe so in the future. So we're going to have several forms of money and several means of transferring, but we just need to connect that and have a level playing field. So we have got to have the same regulation. We've got to have the same risks and liabilities. And all that, and that's what the industry is currently figuring out.
Yeah, I was curious because you mentioned with all these flowers that are blooming. Do you have a specific flower that you are following? And here I'm referring real world use case of, I don't know, a stable coin, a tokenized deposit, or a CBDC that is now live, and you find it packed with lessons for the industry to learn from. So do you have a specific project or initiative that you are following, or you feel it has strong potential? We do a round up. Everyone can pick their flower.
Okay, let me start by saying that in the book, so I'm not a marketing guy, but I'm going to talk about the book, of course. So we have some examples. We have some really good real world use cases in the book. In the national scale, we have China's eCNY. We have an example from Japan. We also have an example from Cambodia, which is the project Bakong, which was about the QR codes. So on the institutional levels, as you know, we have some use cases from JP Morgan, which is JPM coin. Citi has its own coin on the stablecoin side, and Japan has its own coin, DCJPY. This is the name, I believe. So on the cross-border infrastructure, we have some pilot projects. The first one, I think, belongs to BIS, which is Project Agora. And we have another project from Singapore, which is called Project Guardian. They are not super new projects, but I can say that they are working, and they are about to bring some new fresh ideas into life.
Can I just make one comment to Selim's excellent list? I don't want anybody to walk away thinking this is all a pilot and all in experimental phase. This stuff is now being handled in the trillions. This is becoming an absolutely global phenomenon with enormous volumes. It's still a lot lower than fiat, of course, because it's only been around a short while. But if you look at the growth rates and look at the volumes currently being transacted, that is enormous. And of course, this is just the beginning of the journey, where it's being used for institutional use at the moment, sort of in B2B. But if you followed the news, you will have seen that Mark Zuckerberg is now starting to connect Facebook to stablecoins, which means that anybody who has a Facebook app can now send money to another person. This is super exciting and super scary. Do we really want Mr. Zuckerberg to be in control of our money supply in the world? But of course, these kind of things are going to happen, and we need to work out how to deal with it.
Yeah. And it's interesting because you wanted to stress out that not all of them are pilots. And I was curious because most of them are the projects, pilots, or real use cases are coming from Asia and US. And most of the time in our industry, we also talk about payment sovereignty. What is Europe doing?
That's a really big problem. That's very good that you mentioned that, Mirella. That's a real worry for regulators and for many others, especially the stablecoin, which is probably the area with the most dynamism at the moment. It's basically all US denominated stablecoins. So these are tokenized representations of the dollar. We don't want the dollar suddenly coming into Europe in a digital way. We want to keep the euro. And also the providers like Circle and Tether, they're all US as well. So the infrastructure, again, is being dominated by US big tech, and that's something we cannot have if we want our sovereignty, as you rightly say.
Yeah.
Can I add a few things, Mirella? Yeah.
Yeah, of course. I was about to ask you to compliment. Yeah, because you've been sitting there quietly, taking notes mentally, and I'm sure
yes,
that.
Yes. I remember my master's course lectures by Professor Llewellyn when I was in the UK, and he was talking about regulation, and regulation should serve two purposes. The first one is, must be removing the market imperfections, and the second one is should be paternalistic. Today, many of the central banks and the regulatory authorities look at the paternalistic part rather than removing the market inefficiency or market imperfections, because they are, to be honest, really, overcautious and very, how can I say, very reluctant to speed up like the market. So this is why they are using the brake more than normal, because they need something safe. But the current system is very slow. The first part is this. And if you look at the supervisory side, the quality and transparency of stablecoins are very important. And if regulator ensures that they're high quality and transparent in terms of backing, there will not be big problems, maybe, but I can say that saving people to become the victim of cryptocurrencies, which they don't understand anything about their volatility and the pricing system and their backing. So a couple of years ago there were more than 10,000 crypto type currencies in the market. Just we have 200 something, countries all around the world, but the number of cryptocurrencies and the others, so a lot. So stable coins will definitely act as a, how can I say, stabilizer, because, we will underline the regulatory clarity and, we are going to ensure the interoperability and the role of collaboration between private and public sector is very important. Selim and Michael has just talked about, the projects, regardless of it is pilot or not, or institutional, national or, system-wide. What is important is testing again. There are lots of issues in the legal side, in the technical side. And if we focus on the right question, what sort of purpose do stable coins serve, because they combine the stability of fiat currency with the efficiency of blockchain. So this is very important. Today, even, my students send me a question via WhatsApp or email and asking me in 5 minutes, Professor, did you read my question? Can you please answer it? Just 5 minutes ago you sent me. So we are living in the age of urgency. You know, people cannot afford to wait a couple of days for settlement and other things. And if you wait for a couple of days or more than a couple of days, you know, you lose money, on a daily basis. There are lots of transactions that you have to done immediately, and this is why real time is important. So the current system, despite the fact that it's safer than anything by the SWIFT or central banking system, is too slow again, and there could be lots of problems and delays in payments. So I think that the real world use cases will be more transparent and will be more appear as the time passes. But the acts by the U.S. Clarity Act and Genius Act and efforts of the BIS needs to be a little bit speed up, despite the fact that they have a huge innovation hub. So their contribution is very important because they are the leader and they are the central bank of the central bankers. So they must be the people that understands the stablecoins and the tokenizations best.
Yeah. It's interesting to hear you talking about innovation. I guess in a way it's easier for you because you already have the experience, you understand how all these systems work, and it's easier for you to kind of move in a real time system of thinking about these things related to financial services. And I have the feeling that sometimes the new people that come into this industry, the same they adopt this real-time thinking, but not necessarily having the experience as you have. And some of the consequences, like in the crypto investing, might be disastrous for the industry. But now going,
No, Mirella, can I just jump in there? Because I think you made a very good point there. I think that there are actually two communities which have previously been completely apart. One is the sort of bankers who haven't really sort of maybe been aware of the new technologies in some areas which are emerging and are sort of in their more traditional world. And then there are the crypto guys who don't know much about finance, but think that everything can be done by just putting something on a blockchain. And so these two worlds now need to come together, right? The crypto guys need to understand about regulation, about KYC, about AML, how to do resilience, how to do scalability, all the grown-up things that bankers have been perfecting over 100 years. And the bankers maybe need to understand a little bit more how this sort of tokenization works, not the technology, but what the strategic impacts of that are. What new roles does that mean for banks? Because you're going to get suddenly new intermediaries. You're going to get the speed, money will move much faster. So what does that mean for regulators, for banks, for central banks? And these are the questions that they're beginning to ask. And that's, again, why we wrote the book, because we think these answers need to be presented.
Yeah, and regarding these new roles, what are some key risks that may appear, including all this geopolitical fragmentation and regulatory divergence?
If nobody wants to jump in, then I will. Okay, as you can tell, I hope I'm super excited about this development. I think this is really fantastic. So I want to have an optimistic tone and view on this. But again, it's not good to be naive and just to think that if you change an underlying technology, you will change the monetary system of the world, right? So I think we need to, the risks are that we need to move at a high speed and make this thing happen quickly, because it obviously is to the benefit of everybody. It's better to, some Filipino worker can send their money back home immediately without paying large fees to remittance providers. B2B can accelerate their industrial processes. They're all the advantages that we know about, but we have to do it in a measured and careful way so that we don't break things along the way, right? If there's so much fraud and hacking and things going on in crypto, and we've got to make sure that this is a stable, trustworthy system that we're now building, which is regulated with licensed providers, that things are scalable, that we'll be able to transact thousands of transactions, tens of thousands of transactions per second. So one of the risks is, how do we move this whole system to a modern global banking system without breaking anything, right? Because we want to keep the security and the trust and the and all these attributes that we need in a banking system. So that's one of the risks. The other one is that we're going to get new actors in here. You know, some of these proponents say, oh, it's just I put everything on the blockchain and I send my money from me to you. There are no intermediaries and we don't need any banks. And that is complete nonsense. If you actually look at the real way stablecoins move, there are lots of intermediaries in there. Because of course you need somebody to do the wallet for you, to do the issuing, to do the acceptance of the merchant, to do the KYC, to do the accounting, just like in any monetary system, there are many intermediaries and many functions and many actors, and that doesn't go away. But it is put in a different thing. So we have to be careful about which new intermediaries we let in there. And do we want Mark Zuckerberg running the front end, for example? And do we want some garage in North Carolina running the infrastructure with a server and a dog, right? So we got to work out which players do we want in this system. How do we license them? How do we control them? How do we regulate them? How do we monitor them? All these boring things that we do in banking, but that now has to apply to this modern system. Sorry, I went on a bit long, but I could tell you a lot more risks as well. And for that, you'd have to read the book.
Yeah. But what I take from here is definitely Mark Zuckerberg's fans won't be watching our videos, because this is the second time you say it's not okay that they are developing a stablecoin. Yeah.
Maybe Michael, we should send a book to Mark.
Yeah. Selim was saying, to send a book to Mark to read it. Yeah, why not? I mean, it's packed, with also practical ideas, and because they were the founders of the Libra project a long time ago. And if they had the book, maybe they would have built the product better and wouldn't have died. So you might never know what might happen with Mark Zuckerberg with such a book packed of experience might happen. Yeah,
I mean, that's exactly right. I mean, when Libra came out, they did it in this assumption that they could just move fast and break things. And then it all collapsed because there were all sorts of things which just don't work in the real world. And now they're being much smarter now. They're partnering with a partner to issue stable coins and put it all on a regulatory sound basis. And so this time it might very well succeed. Absolutely. So this is exactly this convergence that I tried to talk about before, from the sort of crypto people to the banking people. Those need to come together to provide viable solutions.
Michael, I always say that he opened the Pandora's box.
He suddenly scared all the central banks into doing CBDCs. That's for sure.
Yeah. And now fast forward 12 months, and tokenization of money from fiat currencies to stablecoin, it has been sold 10,000 of copies. I'm curious, taking this into account, this fast forwarding these 12 months, how do you see the space evolving? So after, now you launched the book, and most probably you are going to receive feedback and continue, watching the space and see what are the dynamics. And what the dynamics would be in the next 12 months, or I don't know, in 2030. What do you think?
So let's talk about who's going to read the book. So as you mentioned, Mark is absolutely going to read the book. So the regulators, I mean, the government policymakers should definitely read the book, because there are some examples for them. As Michael mentioned, bankers definitely should, and also the fintech leaders, not the bankers, also should read it, because there are some business examples and also some ecosystem models for them. Treasury managers should definitely read the book, because we have some definitions for them, I mean, in the new space. Academic and researchers are going to read the book, because we open a new space for them, and left some of them for the rest of the researchers that they can definitely make some contribution. And also, but maybe they are the most left aside ones are the consumers or maybe the end users, because they know nothing about the stable coins. I mean, either on the B2C side or B2B side. And by the way, we believe that there are many opportunities on the B2B side with the stable coins, because we've been talking with Michael mostly on the B2B side, because we believe that there's a big demand there and there's a big pain still in the B2B side. But there could be a reason with this book that we can open a space for either for the regulators and for the practitioners to make some contribution on the B2B side, on the cross-border side, maybe on the trade finance side, because they are the most vulnerable sides in the economy. So hopefully we can open a good space and maybe an idea for them, maybe a spark for them to make an investment and solve some new world problems with the stable coins.
Great. Coşkun, yeah.
Yeah, I want to make a few additions. Actually, the book explicitly entertains, two possibilities. The first one is the tokenized money has transformative potential, and it's equally plausible that traditional financial institutions adapt and retain dominance by integrating these technologies into existing frameworks. Because there's a competing situation, they don't want to lose their dominance in the market. But there are also big risks in the global landscape. Geopolitical fragmentation of monetary systems and regulatory divergence is still a problem, has been a problem, and will continue to be a problem, across the jurisdictions. And the possibility of competing digital currency blocks like, Eurozone, dollar zone, and renminbi zone. This will be represented as digital currency blocks in the near future. So this will definitely undermine, the interoperability and the financial stability if we cannot carefully manage this. This is why our book, combines both academic, theoretical, and the market practitioner experience together to provide a platform, to establish a platform to discuss things. It's not a single solution, or it's not a bunch of solutions. It's brainstorming issues. Then most of the books, I believe, it's my personal view, will be based on the ideas and the opinions took place in the book. I'm pretty sure, I'm 100% sure, even if I start to teach this book in my courses to my, master's and PhD students, I'm 100% sure that I will definitely get valuable insights from them, because it's some people see that, these digital currencies and the cryptocurrencies are the young generation were born into this, monetary system. So they definitely have different, opinions. But, and the shift toward institutionalized stablecoins is also framed both progress and tension. It will definitely enhance trust, scalability, and regulatory acceptance, but also they will start to question the decentralized and disintermediated vision that originally defined the stablecoin movement. So, there will be definitely a big, moves in this area. So banks will definitely take a strategic position for themselves, while regulators and the central banks will have a huge homework to do.
Yeah. And Michael?
No, I couldn't agree more with what Coşkun has just said. I mean, that maybe leads us to the final chapter of our book, if you like, where we actually try to make a stab at what the future of this topic may look like. And since we don't have a crystal ball, and since there are many ways this could go, we've actually developed a few scenarios with some probabilities which we've attached to them, and saying it may go this way, it may go that way, it may go the other way, because I think that's the most helpful for strategic planning. it would be, I don't think, serious to say everything is going to be conquered by CBDCs in the world or something. There are many players, there are many initiatives, and there are many ways this could go. And we filtered that down into a handful of scenarios and attached some probabilities and consequences to that. And I think that may be a chapter that might be the most interesting to many people.
Yeah. To kind of build the vision of where this tokenization of money is going. Great.
Yes.
So yeah, we spent, I think, almost 1 hour, and I want to give a big thank you for your time and for pouring your knowledge into our interview, Michael, Selim, and Coşkun. And I look forward to receive a copy of the tokenization of money from Fiat Currencies to Stablecoins, with a signature. And I will take Coşkun's idea that this book starts as a platform to discuss all things related to tokenization of money. And we invite you, our audience, to fill in the other spaces of this book and to join this platform of discussions.
Thank you very much, Mirella. We're going to have a bit of a logistic challenge doing a physical pen on paper signatures. Selim and Coşkun, I think, are in Turkey. You are in Romania and I'm in Tokyo, but we'll work out a way in which we can get the book to you.
Yeah.
So we can definitely meet in Turkey, Michael, which is in the middle.
Let's do that.
Yeah. So maybe have the Turkish coffee with the signature.
Sure.
Back to our
Sure, why
origins,
not?
exactly. Yeah.
Why not?